Hello, this is John Burford. I'm the originator of the Tramline trading method of analysis for financial markets, and I operate a newsletter or blog, which you are more than welcome to sign up for free, of course, and also offer two services. One of them is Pro Shares service, where I analyze individual shares, and my VIP Traders Club, where I analyze and offer trading ideas for stock indexes, gold, silver, treasury bonds, some commodities, especially crude oil, and so on. Now, I'd just like to show you in this very brief video, very briefly, how I go about analyzing a market. This is the low in the euro, which is one of the most popular markets we trade. That is the January 2017 low. It's wave 1 here, wave 2, long and strong, wave 3, wave 4 in a 3, which is typical, and then the final wave 5 up to here. So that is an impulsive 5-wave move, and that indicates the main trend is up. So any correction from that will be just a correction to the main trend, which is up. And most corrections I find are in 3s, and we have that here. We've got wave 1 here, wave A rather, wave B up to here, and wave C. And this should be, because this lies on the Fibonacci 62% correction of the entire wave, that should represent the low. And the next move should be up to resume the uptrend. But I've got more evidence to suggest that, because I've drawn this line here. This is a line of support between these 6 lovely touch points, and then this line here between 1, 2, 3, 4, there we go, 4 touch points on that upper line of resistance. And if you notice that the waves are getting shorter and shorter, that's a long wave, this is quite a long wave, that's shorter wave, and so on. So let's count the waves. This one here would be wave 1, that's wave 2, that's wave 3, that's wave 4, and that's the final wave 5. Now from here we should get an explosive move up out of this coiled spring up into this region here, and my target is to test this major downtrend line here. That's in the 120, 121 area. So the bottom line is that because I've been able to analyze this long-term chart, I can make a fairly confident prediction that the trend will resume to the upside. Okay, now on the shorter term picture, this is the 4-hour chart of recent action. I've got a lovely, this is the last wave 5 I showed you on the wedge. I've got a lovely tramline here. It's got 3 touch points. I've got the same thing here, 1, 2, 3 touch points. And so I've got a lovely tramline pair working here. Now this is the major downtrend line here. And I expect the market to move up above this line in due course. Now, because I expected this final wave 5 to be the low, we entered long positions somewhere in this region here, just under the 113 level here. We had to suffer some of these dips, but what we do is, for the club, we put stops in, very close stops, and none of those have been touched. So now I can make a fairly confident prediction that we're going to be going up in the foreseeable future. So I am bullish the euro. So the bottom line is, for that analysis, I've been able to use tramlines, Fibonacci retracements, and Elliott wave analysis, all 3 pillars of my trading method. And here again is another example of how I use my tram lines. You see these lines are here, parallel, and connecting the highs and the lows. This savage move down here was the flash crash of early January, and you can see how the market just dumped right down to hit my lower tram line and bounced back up again. It's now at this level after a day. That is a stunning demonstration of the power of my tram lines as levels of, in this case, of support.